Good afternoon and welcome to the Blue Line Metals Edge here for Thursday, April 7th. I'm Philip Strebel, Chief Market Strategist at Blue Line Futures. If you haven't checked out our new website, we've got a lot of great tools under there, especially the education section. Go to the university, click on that. There's a lot of great courses that are here, especially covering different topics like option strategies, option Greeks. A lot of you guys hear me talking about implied volatility, also talking about deltas, and you could really take just a couple minute course here and it'll test your knowledge down here, and it could really improve your trading and your understanding of different strategies. Who knows, you could be great at options, but you're just not familiar with them, and so you haven't traded them and you avoid them. This will kind of broaden your scope of different products that you could trade and also really, help out. So looking at the markets here, you go to the S&P 500, it's continuing to sell off. We've had 3 big down days in a row. Remember, this was that short covering bounce. It was kind of the worst of the war, the first part of the invasion coming in down here. And then from that point, we had the short covering bounce, we had the peace talks, and then here, that economic data continuing to weaken, and that sell-off is continuing to grow. So looking at this is the 50-day moving average. We did break the 200-day moving average. So I don't think you're going to hear about that on CNBC or any of the news medias, though. I think they're still trying to pump the upside of the markets, and what they really fail to realize, Fed again, tightening, slowing economic environment, definitely going to put pressure on the stock market. Looking at U.S. Treasuries, continuing, it didn't punch out a new low, but it's hanging right around there. They're still factoring in like 8, 9, 10 interest rate hikes this year. I think that's why they go hard, fast at the beginning, and then they realize that they don't need to raise as much as they want to because of the damage that it's going to do to the economy. Remember, if you look at the CRB index, we are going into a disinflation environment. It's about 5.5% off of that all-time high that we've seen, at least the recent cycle high here. Metals across the board, all of them are stronger except the copper market. I think copper has taken a little bit of a sell-off because of the U.S. equity sell-off, a little bit of slowing down. A lot of different global economies are all slowing down. However, if you look at this chart of copper, it does look really good. You draw this bottom across here, you got a nice little triple bottom going on here, here, and here, all higher lows, and you've got some higher highs. So look to build a position into this downward trend line and then look for a punch back up. Remember, copper demand is going to continue to grow, especially on EV vehicle sales. Now, on the flip side of that, what has not been doing so well, and it is kind of bucking the trend, and the reason why I say trend is you have a seasonal trend. 13 out of the last 15 years, platinum has rallied from about it's March 28th on to about April 18th. So if you want more information on seasonals, go back to our website, start looking at seasonal trends. If you want to just throw in your information right there, click submit. We'll get you on a trial of those seasonal trends, and there's a lot of great ones. You get a lot of repetitive patterns and seasonalities, especially in the green markets. So going back to it, gold looking really good. It's holding this range right here from about 1920 on down to about 1890. That's where you want to scale in at. Remember, scale in, scale out, add incrementally exit, hold some core position in case you do get that blast off to the upside. So where we're working orders on selling 1945 and 1965. I think those are some good levels. It'll be the top end of the range once we get to 1965. The chop range is right around 1945. Hold some core for a breakout. If the Fed does really get really silly, make some massive policy mistakes, that gold could move up quite a bit more. Silver, that's been holding on really good too. It's been weakening, so the gold-silver ratio has been climbing. However, it is holding a couple key moving averages. You know me, I'm not a moving average guy, but it seems like the rest of the people out there are. So it's something to take a small look at. That's all. It's just one little tool. It's the worst tool in the toolbox, but it is something to look at. A couple standouts here. The crude oil market, it was really selling off here, and then now we got a bounce. So some of the people that are trading, day trade, things like that, they were trying to pick up this bounce down here, and they're kicking it back out a couple dollars higher. Remember, there's a lot of volatility in that market. You got quite a nice average true range. If you go on the daily chart, you're getting about, it's a $6 true range. So you try and buy some of these D clients, kick them out $3-4 higher. I think you could be quite successful just mapping that out and trading it. Otherwise, not really anything else standing out too much today. We've got the Masters going on. We've also got opening day of baseball. So I think people are like heavily distracted, and volume is definitely going to reflect that. Now, looking at the calendar, I did find this, and I keep pumping this website, this forexfactory.com. Something I really like on here, if you trade just specifically metals, click on this metals calendar, and this will give you the things that are going to affect those markets. Like if you're trading copper, hey, you probably should have known on Monday, at 3 a.m., there was a LME copper inventory data coming out. So I guess it comes out every day at 3 a.m. But something you could filter this down on is you could take all the countries away, just add the United States, apply the filter, and bam, here you go. Now you've got a more concentrated economic calendar on things that are going to affect the metals market. So looking at next week, a lot of stuff coming out. CPI, core CPI, PPI. So a lot of inflation data, retail sales. I'd like to see what those are going to do, because retail sales really surprised to the upside. That had that U.S. economy going back on the upswing, especially after COVID and everything, and then now we're starting to decline. So remember, Fed tightening and declining economic environment. You could use this thing right here. You could start looking at some of these different inflation gauges and different graphs here. Check the rate of change, check if it's accelerating or decelerating. So a lot of good stuff out there. Let me know if you need anything. Probably do a quick video here tomorrow, and if you need anything, give us a call, 312-858-7303. Remember, futures and options trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.